Thank you very much, IUX Education, for giving us this opportunity. So we're going to talk about dynamic leverage strategies adapting to fast-moving markets. Now, in the comment section, I want you guys to type in leverage because that's the first phase that we're going to be focusing to. We want a practical approach to understanding leverage in dynamic financial markets. So I know some of you guys, maybe it's your first time hearing about the term leverage, or maybe you have heard of it from other topics, from other discussions, from other places, but you haven't have any idea about that yet. So we got here Maud, we got Cherry, Eliza, Tonichi. Thank you so much for participating. All right. So first things first, I want to properly introduce myself. My name is John F. Dong. So let me just read this one. No? I'm an experienced content creator and trader from making mistakes, trading blindly, and blowing accounts until I learned how to do proper risk management and to leverage. Yeah, I know most of you are, maybe you have seen me on TikTok, you have seen me on YouTube. Well, thank you so much for watching that. But yeah, I'm also a trader. I've done this way back 2022. Yeah, that was my first serious trading experience. So I experienced losing a lot here in trading. That's why I want you guys to really focus on this one, because I don't want you to experience those bad experiences that I've had from the past. So it's really important. Also, you want to see me on my other contents as well. So I just, aside from financial, I also share some lifestyle on what I do about my hobbies and all of that. But primarily I focused on finances. I mean personal finance. So it's all about me and my experience. And yeah, I think and I believe this will definitely help you towards your financial market career, especially if you're doing forex trading. Now, I want you guys to identify or recognize yourself who among here in our chat box, in the comment box, are beginners. Please do type in the chat box. Yeah, this is just a little exercise to kind of identify yourselves if you are a beginner or if you're an intermediate. Yeah, who among you guys are intermediate, or if you consider or recognize yourself as advanced. Yeah, we have here Eliza, beginner. All right, that's good to know. Yeah, this is definitely important because we want to understand how deep or the level of your understanding when it comes to forex, if you really know what leverage is, the risk management and everything. Okay, we've seen lots of beginners right here. I know maybe some of the viewers are, just hesitating to comment or to chat in the chat box. Yeah. But yeah, this is going to be friendly for all the types of audience, whether you're a beginner, intermediate, or advanced. I mean, this webinar will be something that you don't want to miss. Okay, so it's good that you guys identify yourselves if you're a beginner, intermediate, and advanced, because this is my next question. I don't really see if you raise your hand, but I want you guys to raise your hand physically if you have blown an account. I have blown an account. Your risk over trading. Among you guys here, risk over trading means you traded like beyond your limits, and then you have been margin called, like you received an email or a text message from your broker because you're about to be liquidated, or you increased lot size after losing. Who among you guys are here? Yeah, I see no one is willing to admit, and that's very understandable. Oh, we have here some admittedly that they have blown their accounts. Probably they have risk over trading and margin called and increased lot size. I asked you this because since you already recognized whether you're a beginner, you're an intermediate, or if you're an advanced, definitely you know how to accept these types of behaviors or these types of let's see, activity. And that really adds up to the experience. Yes, that really adds up to the experience. Whether you have blown an account, that's an experience. You risked over trading, that's also an experience. You have been margin called, that's part of the experience. And you increased lot size after losing, at least you experienced revenge trading. But yeah, that really adds up to the experience. But the thing is, what is leverage? Since this is the first phase topic, I want you guys to chat in the chat box, comment down here if you have any idea what leverage is. It can be from other perspective, maybe from not forex, not finance, just what comes to your mind when you hear the word leverage. We want to be interactive with this one because I want you guys to somehow, refresh your minds right now if you have heard about leverage from the previous conversations that you have, from your past professor, or maybe from other webinars. So right now, maybe some of you are hesitant to really mention or to chat what leverage is about. So here, leverage lets you control a much bigger trade using a much smaller amount of your own money. Yeah, we have here a question from Tonichi Gomez asking if it's an investment. Well, this is the answer. Leverage, it actually lets you control a much bigger trade using a much smaller amount of your own money. As highlighted, much bigger trade using a much smaller amount. Who among here doesn't understand that? I want you guys to be honest, to be completely honest, so that we can be, aside from interactive, we learn from each other. Because this is what this webinar is all about. I want you guys to not be intimidated. This is fun. I want you guys to be, to have fun as you learn. So again, as stated here, it lets you control a much bigger trade using a much smaller amount of your own money. Let's have a real life example on how leverage can be used. Now, let's say you have $100, an amount enough to buy an entry-level smartphone. So that is your amount. That is the amount that you have right now. That's your own money. But if we apply leverage, what do you think would be the buying power? But if we apply a leverage, what would be the buying power? Let's say, if the leverage is 1:3,000, then your $100 has now a buying power of 300,000 US dollars. Which means you now have a maximum buying power of 300K, more than enough to buy a luxury house. Again, if we have $300,000 in our pocket, that's what we can actually buy, right? But since we only have $100, again, that's enough to buy an entry-level smartphone. Again, if you apply leverage in this one, your $100 has now a buying power, depends on the leverage you used. Since we have 1:3,000, therefore your $100 has a buying power of $300,000, which can be more than enough to buy a luxury house. That's a real life example so that you know how these leverage can be used. Now the question here, since you know how leverage can be applied in real life, I mean, you can't really have that like 300,000 because you have 100, right? But you get the point. But the thing is leverage an advantage or disadvantage? Quick thoughts. If this is going to be the example, like $100, you have that in your own pocket, then we apply leverage because the platform or the broker allowed you to use a leverage, which gives you this buying power. Then the question is leverage an advantage or disadvantage? Let us know in the comments right now. Just advantage or disadvantage. I want you guys to interact with this one. At least I know what's in your mind. If you think leverage can be used into your advantage, or is it part of disadvantage? I just want to see if our audience right now is, taking this into advantage side or maybe into the disadvantage side. All right. So we are seeing a lot of advantage. Okay. This is very important. Okay. I've seen lots of advantage and one disadvantage here. Oh, it's a question. Okay. Yeah. I mean, you get this buying power, right? From $100, then the broker or platform allows you to have this leverage, and then $100 has now a buying power of $300,000. Like, who doesn't want that? But the question is, again, is that an advantage or disadvantage? Okay, I've seen answers here. Advantage, one disadvantage with a question mark. Elf answered both. Well, that's a great one. Because according to Tonichi, let us just highlight this comment. Tonichi Gomez, advantage, somehow disadvantage, because we don't know the risks. Exactly. You cannot really identify it yet if you don't know the risks. So it's easy. Yeah, like it's easy to think about, oh, I have $100 and this platform is actually offering this leverage thing. So I just have to go for it. But the thing is, do you understand what leverage is all about? And do you think, is it an advantage or disadvantage? Because my personal answer to this is that it really depends on your risk management. And we have to highlight again and comment Tonichi Gomez because of the answer here. Advantage, somehow disadvantage, because we don't know the risks. And that is very important, that you actually identify or you recognize those risks. Let's proceed. Since we're talking about risk, do we know what risk is all about? According to this presentation, risk is the possibility of losing money on a trade. Let's say you can actually apply leverage, but do you know the risks? Do you know the possibility that you may lose money while you do those leverage trading? So this is very important. Okay? This is something that you don't really, want to miss. So in the comments right now, I want to know if you guys are aware of what risk. Type risk in the comment section for just to let us know which of these listeners right now, these audience, are actually aware of risk or risks. Awesome. It's good to know. Yeah, I want you guys to let me know if you are aware of the risks. Yeah, I see most of you are aware of what risk is all about. That's good. This is very important. Because if you want to do trading and add leverage to it, you must really know your risks, like the risks that it has with, and you really know how to do your risk management properly. So this is the question right now: how do you possibly balance or adjust your leverage and risk? Does anyone know in the comments? Do you have the chance to adjust or balance your leverage and risk at the same time? Who among you here, especially for the intermediate and advanced levels? Because I understand for the beginners, maybe this is their first time hearing that they can actually balance or adjust their leverage and risk. But for the intermediate and advanced, maybe you have an experience. Okay, I want to know in the comments. Okay, we have Joshua. By creating a plan. That's a good answer, actually. And by the way, there's no incorrect answer in this discussion. I want you guys to participate. Okay, according to ELF, it's about position sizing. Okay, that's a really good answer. So with those answers you have in your mind, maybe some other people are hesitant, but please feel free to comment and to join our chat box here so that we know how the level of your understanding when it comes to leverage and the risk. Okay, so I want you guys to proceed with this one. So for me, this is how I think. So the question is how I balance or adjust my leverage and risk. If your answer is position sizing or by creating a plan, for me, I treat trading as chess. Yeah, that's how I do it. Why? Or maybe you're curious. But before we proceed, who among you here are playing chess, or maybe you have played chess from the past? I want to know. Like me, I have like a dedicated channel, just me playing chess. But I want to know which one of you listeners right now who have an experience playing chess, or maybe a chess varsity from the past, playing chess right now for fun, playing chess as a hobby. I want to know, because you guys will be somehow relate to what I'm going to be sharing with you. And you guys are very lucky because I wasn't able to share this from my past speaking engagement with Traders Fair. I wasn't able to share this one. So yeah, this is something that I can really share with you guys. Okay, so we see a lot of people here who are playing chess. We have Chester, Cherry, Eligiana, Elf, Moncon was. Okay, that's good. At least you have an experience playing chess. So why do I think that trading is equivalent to chess or equals to chess? Okay, so here, I want you guys to identify the chess pieces as yourself, or maybe those chess pieces represent you. And your king is your capital. Your queen serves as your risk management. The rook represents the trend. The knight represents the entry timing. The pawn is for the execution. And for the bishop, for the strategy and analysis. Okay, please do take note of this, guys. Maybe you are taking notes. That's all right. That's awesome. And lastly, the board. the chessboard. For me, that's the market environment. Let me repeat that again. Let me get back so that you guys can take note. Take this. You yourself as the chess pieces. And each chess pieces has a representative or representation to trading. Okay? Your king is your capital, or the capital is your king. Your queen represents risk management. Your rook represents the trend. The knight represents entry timing. Pawn represents execution. The bishop represents the strategy and analysis. And your board is the market environment. Why do I personally think that trading is chess? Because in trading, for you to be able to win those trades, you have to plan out, you have to strategize, and you have to you have to execute those trades properly. Of course, again, we discussed each pieces has its own representation. So let's say you want to play chess without your queen. What happens? What happens if you play chess without your queen? All right? If you play chess without your queen, definitely you're bound to lose because it's a major piece. It's a major officer in the game. And same goes with trading. You all have these pieces right here. Your capital, your trend, entry timing, and everything. But the thing is, you don't have your queen. You don't have risk management. So what's gonna happen? You still have the chance. Yeah, you still have the fight, but it's going to be very difficult. Okay? It's going to be difficult. Pomong here doesn't really get what I'm trying to say. That's why I asked in the first place if you guys are actually have an idea what chess is all about. Okay, so the goal in chess is for you to mate your opponent. And there are like other factors, like if you're at the advantage in material, you have more chances of winning. So if you're less in material, you have chances to lose the game. Therefore, in trading, that's it. I mean, that's how I think why trading is chess. So let's say you're trading without your queen or without risk management, then that is bound to lose. If you're trading, let's say you don't have this trend, you don't have the rook, then maybe it will not work at all. If you're playing chess without bishop, you're one piece down. That's also bound to lose. Or if you trade in the forex market without proper strategy and analysis, that's kind of bound to lose. You're like trading without any sense. Okay? So I hope you guys understand this part. Now, I want you guys to type in 1 in the comment section if you somehow get what I'm trying to say here in the trading is chess analogy, because this is going to be very important for later discussions. Take note, in chess, this needs patience, planning, long-term thinking, positioning, and sacrifice to gain. For those who are playing chess, I know you guys recognize or somehow, relate to this. If you lack patience, you're bound to lose. If you don't plan at all, you're bound to lose. If you don't have long-term thinking and your opponent has, way more capacity to think long-term, then he might be winning and you will lose your match. If you don't know how to position, then maybe you lose your match. Or if you're not willing to sacrifice in order for you to gain, then maybe your opponent deserves to win and not you. So that's for chess. So these are the factors you really need to consider in order for you to gain victory. Again, in chess, you need patience, planning, long-term thinking, positioning, and sacrifice to gain. These are the factors that, really, really contribute in order for you to win a chess match. Okay, who in the comment section has a question regarding this? Since we're talking about chess and we're actually having an analogy with trading and chess. Awesome. Okay, we've seen agree with Chester and Cherry, correct? Okay, that's great. Awesome. Because if you have patience, if you know how to plan, you have this long-term thinking, you know how to position, and sometimes you know how to execute those proper sacrifice in order for you to gain maybe a positional advantage or material advantage, then that's a victory. Same goes with trading. You need patience, right? In trading, if you lack patience, then you're bound to lose. If you don't plan your trades, then again, you're bound to lose. If you don't think long term, maybe you can win some, but in the long run, you'll lose. If you don't know how to position your trades or maybe position in the market, you're bound to lose. And if you don't know how to sacrifice, maybe sacrifice your time instead of playing some addictive games, and focus on the strategy in investing in yourself, proper education, getting yourself a good mentor, as what Tonichi mentions. Well, then definitely you will not win if you're not be able to sacrifice. But if you have this patience, you know how to plan properly, you know how to think long term, you have proper positioning, and you can sacrifice or to gain, then that will give you a better decision making. As a trader, you want to have this trait, you want to have this behavior, you need to be a better decision maker. Who agrees? Let us know in the comments. Do you agree that in order for you to be a better trader, you have to be, or you need to be, a better decision maker? Okay? Yeah, I've seen you guys. Thank you for interacting. Because if you disregard all this and just do risky trades, what do you think will happen? Since you guys are interacting, because I asked a while ago in the beginning section of our first phase of this webinar, I asked you guys to identify yourselves, and you recognize yourselves as beginners, as intermediate, as advanced. And after that, I asked if you have blown your accounts. Let me just get back to that slide quickly, because this really contributes to that. So I asked you guys a while ago if you have already blown an account, you risk over trading, you have been margin called, you increased lot size. So if this happened to you before and you're just, you're just hesitating to answer right now, which I completely understand. And it's completely understandable because it happened to me already. Then therefore, you're bound to lose, according to Tonichi. Guaidi lost all money. Yes. If you disregard all this and just do risky trades, you'll just repeat the same mistakes all over again and continue to lose. Now, who among you guys here in the chat wants to lose? You guys want to lose? I mean, I don't want to lose. If I'm playing chess, why am I playing chess? Because I want to win, right? I want to checkmate the opponent. I want my opponent to say resign, bro. Same goes with trading. Why do you trade? Because you want to win. You want gains. Now, if you have these mistakes, you repeat the same mistakes all over again, then you'll just continue to lose. Okay? I hope you guys are still with me. Type in one. Okay? I just want to know if you guys are still with me. Awesome. So, I mean, from the very first phase, we talked about leverage. We mentioned and we actually recognized which category are we in. If we're beginner, if we're advanced or intermediate, in the middle, then we want to accept if we are actually doing these mistakes from the past, or if we're willing to accept those mistakes from the past. Because again, if we disregard all this, we'll just repeat all the same mistakes. Okay? But if you carefully and consistently plan and calculate your leverage and risk, what do you think will happen? What do you think will happen? Because again, if you disregard all this and just do risky trades, you'll just repeat the same mistakes. And all over again, you'll continue to lose. But what if you carefully and consistently plan and calculate your leverage and risk? Do you think the result is more on the good side or on the bad side? I want your answers, guys, in the comments. Okay, this is not a Q&A section, I know, but this is very important because for me personally, I want this to impart this to you guys. Without acceptance, like for you, you're not be able, if you're not able to identify or accept your mistakes, then maybe there's no possibilities of growth. So I think one step that you can actually do is by participating in the comment right now, and just enter your thoughts. Just type in your opinion, your comments. There's no wrong answers here, guys. I just want to know what are your inner thoughts. I just want to hear what's on your mind. Like in this one, if you carefully and consistently plan and calculate your leverage and risk. Because if you apply leverage, right? If the leverage is 1:3,000 and you have like $100 and your broker allows you to have this leverage 1:3,000, then you have a maximum buying power of $300,000 US. That's leverage. However, according to you guys, those are advantage. But you can't really tell if you don't have risk management. But what if you carefully and consistently plan and calculate your leverage and risk? Okay? According to Coach Chester trading plan, Tonichi, not a 100%, but you get a high chance of winning trades. Yes, totally agree. Because there's no such thing as guaranteed wins. Even if you watch those traders who are actually excellent when it comes to trading, whether it's crypto, forex, stocks, or anything that they trade, there will be times that somehow they lose. Though they're excellent, but there are other factors. And Tonichi's right, not 100%, but you get a high chance of winning trades. Guaidi, better execution and risk management. Correct. Because if you carefully and consistently plan and calculate your leverage and risk, you have better execution and you know how to manage your risks. And therefore, you develop better risk management habits over time, which a lot of traders are actually lacking. To be honest, I myself has been included in this. The reason before I consider myself as a not successful trader is because I am actually looking at the numbers. If I don't earn, let's say I don't earn $1,000 a day, for me that's a failure. But if you think outside of the box, if you just, preserve your capital, if you protect your king, just like in trading is chess, capital is king, right? In chess, you have to protect your king in order for you to have this chance of winning. Same goes with trading. If you protect your capital, doesn't matter if you have the PNL, negative PNL at the moment, as long as you know how to properly manage your risk, then you'll be a better trader. You develop better risk management habits over time. And who doesn't want that? Right? Who among here wants to be a better trader than what they are currently right now? I mean, me. I want to be a better trader than myself. Like right now, if I'm like 15% better trader, I want to be like 16% at least. Yeah, Guaidi, so true. Thank you. Joshua, me. Yeah. That's great. That's great. And thank you guys for this interaction. I mean, again, there are like advanced traders, there are intermediate traders, and lots of beginner traders. But regardless, whatever category you are, this applies to every aspect. I mean, I apply chess in life. So I think maybe chess can be applied into trading. Or maybe you can apply what you do in life in trading. Right? If you're a disciplined person, why not apply it in trading? If you're a disciplined chess player, you apply discipline while you play chess, why not apply it as well in trading? Right? So with that, you develop better risk management habits over time. Correct? Awesome. Okay, let's proceed. So we're actually near the end, but please stay tuned because there will be lots of Q&As. Okay? There will be lots of Q&As. So here are the 5 takeaways, and I want you guys to take note if you have your notebooks with you or you have leaflets. Okay? So here are the 5 takeaways. You can take note of this. Number 1, leverage is a tool, not a strategy. Okay? Hello, Annie. Okay? Who agree that leverage is a tool, not a strategy? We've used leverage. I've given an example a while ago, a real life example. So therefore, it is a tool and not a strategy. So please, what you call this one? Take note of this one if you have a notebook with you, especially for beginners, so that you don't have to experience the wrong or the mistakes that we did from the past. Okay, number 2 is risk management comes before position size. So what does it mean? Doesn't matter what position size you have. If you don't have risk management, then I guess you'll be bound to lose. Therefore, takeaway there, risk management comes before position size. Okay? Number 3, reduce leverage when uncertainty increases. What do we mean when we say uncertainty? Among you guys in the comments know uncertainty. Or uncertain. Not certain. Uncertainty. So it's like a antonym of certain, right? Okay, changes. So you're not so sure, right? You're not so sure. So if you're not so sure, if you're uncertain, therefore you reduce the leverage. So that's just number 3. Reduce leverage when uncertainty increases. Now for number 4, think in probabilities, not predictions. I know some of you might disagree with this one, the think in probabilities, not predictions, but who among you guys agree with think in probabilities, not predictions? For me, that's the reason why it's here, because I am thinking that think in probabilities and not predictions. Because in predictions, most of the time, you like to predict that, you love to predict things that will favor you. But most of the time, you don't think about the negativity. You don't think about the impact, the negative aspect that might impact to those predictions. However, in probabilities, you tend to weigh the positive and negative, right? So if you think in probabilities and not predictions, I think that will be added to your better trader skill. So again, that's number 4. Think in probabilities, not predictions. And for the number 5 takeaway, consistency beats aggressive trading. Oh, in Filipino, maraming tatamaan dyan. Yeah, what I meant to say is that a lot of Filipinos are actually doing aggressive trading over consistent trader. I mean, most of them, they're aggressive because they are actually chasing. I mean, not them, but I myself included. I was there. I was an aggressive trader. I always tend to reach or to chase that high gains, high returns, and I ended up, losing my entire portfolio. But if you think of it in a large scale, most are aggressive, but they're also consistent traders right there. So if you are a consistent trader, you'll definitely beat aggressive traders. And who agree with that? I myself. I agree that consistency beats aggressive trading. Do you agree? All right. Yeah, those are our 5 takeaways. Okay. Now again, let us repeat our 5 takeaways for tonight's webinar. So number 1, leverage is a tool, not a strategy. Number 2, risk management comes before position size. Number 3, reduce leverage when uncertainty increases. Number 4, think in probabilities, not predictions. And number 5, consistency beats aggressive trading. Now, I hope you guys take note of this, because you might not find this on other references or other books. I mean, these are actually based on personal experience, but these are the 5 takeaways that you really want to take note of. And lastly, based on what I'm saying here, in chess, you don't sacrifice your king for one move. This just means that you don't have to lose your king, okay, in order for it to win. And in trading, don't sacrifice your account for one trade. Now, since we have an analogy that trading is chess, when we know for a fact that you can't really sacrifice your king in a chess game because that will end up in a losing status. This just means that in your trading journey, or if you're playing chess, you don't have to, to give up your king. You don't have to sacrifice your king. We have pawns, we have other pieces. So if we lose our capital, which is again, capital is king, therefore we cannot, or we don't have any chances to be back, to trade again one more time. That's why we need to identify ourselves first. We need to accept our mistakes as well, because it all contributes on how good or how bad you are as a trader. And that's for my perspective. Again, you may agree or disagree, but I want to share with you guys that this is how I view trading. For me, trading is chess. Since I was a kid, I played chess, so it's how I see things. But you can also apply that to other things that you love, things that really, add value to trading activity that you have. So in the comments right now, I want you guys to type in IUX. Yeah, this is how we will know if you guys are still here. I want you guys to type in IUX, regardless if it's all caps, small caps. Yeah, I want you guys IUX. Awesome. I'm seeing you guys. All right. Because we're about to go on to the next slide that you want. Okay? Awesome. Now, before we jump into the Q&A, I want you guys to be aware of this risk. So CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76% of retail investor accounts lose money when trading CFDs with this provider. So you should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money, which is why we talk about leverage and risk management.